Markets are rallying fast after Trump's latest move on China. But what are smart investors doing right now? Hi, I'm Katherine Chang. I'm a licensed financial advisor and portfolio manager with over 20 years in finance. 2025 started off well for the US market until Trump spooked investors with his tariffs in February. The subsequent trade war with China created severe tensions, panic struck, and a massive sell-off ensued. The S&P 500 dropped to bare territory for a brief while. Then the previous week, the Trump administration and China announced a 90-day pause on most of their tariffs on each other. Market surged on the good news. After that, Trump signed a $600 billion deal with Saudi Arabia. That's even more good news. The S&P 500 recovered all its losses and is up 1.53% from the start of the year. Investors are on a risk mode again. So what does this mean for you? First of all, if you're looking to grow your money, whether it's your retirement fund or your portfolio, you can't afford to ignore the US stock market. I've shown this chart before, but I'm going to share it again. The US stock market has been proven to go up over time regardless of recessions, financial crisis, COVID-19 and such. The average return of the S&P 500 is 10% a year. Imagine harnessing that for your portfolio. How much faster your money will grow instead of keeping it in properties or the bank. However, not everyone is good at investing. If you are the emotional type, when people are panic selling, you also panic and sell. Or when valuations are already high and you get FOMO and put all your money into one stock. That can be a disaster. I personally know of a few people who lost a lot of money in April because they panicked and sold. If they had waited, the market recovered. To be successful, you need three things. First, a timeline for your investment. Take a longer term view of at least 5 years. This will iron out the short-term volatilities. Secondly, unless you are an experienced trader and have lots of time to do research, don't invest in individual stocks. Put your money into US mutual funds where top Wall Street fund managers do the buying and selling for you. Thirdly, dollar cost average. Put your money in regular intervals. You will catch the highs and lows, allowing you to average cost over time. This increases your probability of success. If you like to grow your money, it's time to take action. Let's have a chat.